you want to.
Yeah, because what I'll do is I won't write anything down now, and then I can re-watch it slowly and kind of write it all down.
Yeah. Okay, so let's start off with looking at the sharp pattern. Share screen and come over to the scanner. Let's see if we can find one. GBP USD on the H1 time frame. Well, first of all, we can actually see this has failed. Well, not failed. The D points on sharks can move, which is why they why we have a different criteria. Because if you look at any other scan except a shark, you've only ever got one entry point.
Yeah.
One entry point. Whereas if you come to a sharp pattern, it gives you 2 entry points. So I'll go through the rules in a minute, but the reason that we apply the rules that I'm going to tell you is because the D point can move on a shark. And that's exactly what is happening there. It hasn't solidified at the initial point that it was given, and it's coming down here. So the rules are that we don't enter a shark until it's reached the second entry level here, or
so is that when the D point is reached that level, or when the candles have?
When the candles have, when price has, yeah,
right.
Yeah, or 50% to take profit 1, or even take profit 1. So that's the area that we're looking at. So when I'm drawing that up, if I go to GBP USD, and I'm not sure I've got that one anyway. I haven't got it yet because it hasn't reached the criteria. So I'll just do it on here. I take, I get my ruler when I'm drawing it up for everyone and putting it in the group, and I'll have first entry point 13230, 13230, something like that, up to, sorry, wrong one, 13244, up to 13256 is 12 pips, because you ignore that little tick at the end. It's not 121, it's 12. So that means 6 pips up would give me 50%. So when I'm drawing my scan, I sometimes draw it up, not obviously if it's done that.
Yeah.
Then I'll put on a bright coloured horizontal ray at 1.32, whatever the next bit up is, 504 or something like
so
that.
That's halfway.
Yeah, and then I'll make a note, 50% to TP1. So I know I'm looking at that zone depending on where the quarter theory and the pitchfork is. So the rules are not till the candle has reached the second entry, which is this one, or 50% to take profit 1, or even take profit 1. So I think Sam prefers take profit 1. Chance's wife, she says in her own admission, she's a very conservative trader, but I'll be happy at, anywhere in that zone there, depending on where the pitchfork is. Okay, so that's the rules for the shark and why. And here's a classic example of what's happening. The D point's moving. It's not a confirmed scan yet. So, that's what happens with sharks. They often do that. I mean, other scans often fail as well. I don't know if I'll find one where it has dropped off.
So when it's a normal scan, what are the rules for that?
The normal scan is simply that we normally start with Trader's Way, but you can use any of them. It really doesn't matter. 1 hourly time frame analysis. We'll sometimes look at the 30-minute, even the 15-minute and the 4 hourly. We never look at the daily. We're just not in trades that long. So I normally start with Trader's Way because that's the main feed. Trader's Way hourly, main feed for the scanner. And then once I'm on that, let's see what we've got. So the rules are, this is a new one. There's an NZD CAD as well. What's happened on all JPY? Okay, so or JPY, the rules are always the same for any of them except a shark. So check your time zone, bottom right is your local time zone. I'm Paris time, so I'm UTC +1.
I was doing that. That's one of the things that I kept not doing as well.
I know, sometimes it's very easy to forget. And again, it must be the same on TradingView. Time zone must be the same. And check that you're on the right pair, because occasionally, because some of them are similar patterns, and I've been on the GN instead of GA or something. So I always double check I have got the right pair and the right time frame up here. So then you get the ruler, and C to D leg needs to be a minimum of 80 pips. So that's 124. So that's good. That's conformed to the rules. And the reason we want 80 pips is because when we're drawing a pitchfork on, it gives us 4 legs, and that gives us each leg of a minimum of 20 pips, which gives us our 2-to-1 ratio. So it's just really easy for your brain to work out your compounding. I mean, I think Chance is just so brilliant the way he's worked this system out. It just makes it so easy. 10 pip stop loss is 2% risk, which is all we ever risk, to make 4%, which is the 20 pips. And I really love that. Then it must be 20 pips solidified off the D point, and we can see that candle, this little one here, has just moved 11.6. So we're just going to wait for that to have moved 20 pips, that first candle off there, because that last blue one is the last bit of this Elliott wave coming down that's formed the long extension leg off the 88.6. That's normally what it is. And they have different reversal points on them. Christopher Terry in the Academy in the 300 or 400 series, he's got some old videos of how he explains all the different reversal points. I mean, he's just such a phenomenon, which is why he's a $200 million trader. So if you want to get into the deep technicalities, which was, you know, way beyond me, but I did go through them and it was interesting. Anyway, so that's the first candle up, and you're just waiting for it to go up 20 pips. So if we then look at this or JPY here, I think I don't trade this one myself hardly at all, but I don't know, I probably drew it up so it was in the group for everyone in the library.
Ideally now I just need to draw as many scans on as I can, that way I've just got them
there. You've just got to build them over time. And if you need an old one, we can all, you know, sometimes we say on the chat with Chance, oh, can you give me that, the points? And he'll put it in his pip talk. I think he's Club 43, which is on in the IM Center. So he will put scans in there.
If you can't, obviously you're not going to be able to get them all in a 1 minute if they're old. So you just draw them
you have to go to the five. Do as much as you can on the 1 minute, but TradingView will only allow you to go back 2 weeks. And then what you can't do on the 1 minute, do on the 5 minute.
What about, would you do it on the 3 minutes or just 5?
I presume you could. He just says, anything I tell you is just what I've learned from him. I'm just like a parrot, you know. I'm just going to hide that so we can draw this one, and just fade that one.
I mean, even on your live just then, when I was watching it and following it, and it is making a lot more sense to me. It's just certain things that are kind of gets my mind boggled a little bit.
Well, it does sink in eventually. What Chance says is that it takes 3 repeats of a video for the human brain to actually go, oh yeah, you know, for the fog to lift, you know, because the first level is kind of all coming at you. The second level, you like kind of part getting it. And then the third level is, oh yeah, why didn't I see what they were on about? And even then, you know, we all learn at different rates. It can take longer for something to sink in than others. I mean, I'm the least maths person you could ever come across, but I like patterns and I can understand patterns, and I like the major levels, you know, that's what I like, you know, that gives me a lot of confidence. And then it's about spotting whether you're in a momentum trade, where the orange line is really taking off either way, or a reversal trade, which is harder to spot. And then, of course, as he says, it's harder to see an Elliott wave when you're actually in it. So we tend to look just, that's why I like the pitchforks, because they're going for the, excuse me, I'm going to sneeze. Hang on a minute. Oh. Hang on.
That's you.
Sorry.
Right.
Right, come back to the harmonic scanner. So AJ hourly, we've got an X point of the 6th of November at my time at 1300. The A is 11th at 08. The B is the 13th at 02. C is the 16th at 12. And D is the 19th at 10. So I'm just checking time zone, correct pair, and I'm on the hourly. And then you can do it either way. There isn't a right or wrong. Chance can just draw them on visually. Highs and lows is what you're looking for. You can see a low there, and it's either that high or that high. There's another low, there's another high, and there's the low. So you can do it that way, or you can take the brush and just put little brush marks against the times that you've just drawn. So there's no right or wrong. I tend to do it like this. 6th at, it's just whichever way your brain takes in information. So, and it's 6th at, and make sure the magnet's on, then it'll click it on correctly. Yeah. 11th at 08. So it looks like it's going to be that. 13th at 02. So mine says 03, but that's either I haven't lined it up exactly, but you can see it's obviously that candle there.
Yeah.
16th at 12. And they do need to be accurate, because otherwise your pitchforks will be on an angle, will be out over a period of months, and that makes them non-tradable. And there's that one at 10. So once we've got that on, just come and grab our pitchfork, keep the magnet on, and go like that, and just turn it to white. It's just the way I like to work. I just try and keep everything as similar to Chance as possible, because sometimes if you're on his sessions, he does back testing, and he'll say, send me your charts in and I'll have a look at them.
Yeah.
And if you can put your ego to one side and send in the rubbish ones, like cocking up the experiment in the lab, then obviously that's how you're going to learn off a master trader, rather than send in a brilliant trade you've done where everyone goes, oh, yeah, wow, clever you. I mean, that doesn't help you learn. So it does make you look a bit of a mug, but I do try and, I can't get up in time for them now, because I think they're on about 5 a.m. in the morning. That's my excuse. So once we've done that, as you know, and the reason I'm drawing this on is so we can look at where we are on our, where current price is, because this is setting up as a new trade. And that's why it's important to use the lot size calculator, because a pair like AJ is what's called a Forex cross. There are 7 Forex majors, and you'll get a different leverage. Well, I do on Pepperstone, if I use Pepperstone, than you will on the majors. So you can't use the same lot size for all your currency pairs, because you're either losing money or leaving money on the table. The only one that is a standard 1-to-1 is the biggest traded currency, which is Euro USD. Everything else, if you think about it, if you exchange Great British Pound to Australian dollar, you're going to get, you know, that's a stronger currency than if you went and got Vietnamese, you know, whatever they are over there. I don't know what they are. So it's a lighter weight currency. Doesn't really matter with the B and the A points. It's the ones with the pitchforks on, but I just like to.
Yeah, I've been putting them on.
It's just the way I've been taught with Chance and Samantha. They always line it up properly. I just try and follow everything they do, because I just one day would like to be as successful as him. He's just so amazing.
Yeah, well, you got to just mimic what they're doing, and you shouldn't fail, really, should you?
Well, he always says treat it like a 4-year college degree. And I know whenever I've tried to do this faster, I've lost money and I've tripped myself up. And
Yeah.
now I've calmed down and just said to myself, I can do it. I can get there. I'm going to get there. You know, I feel much more patient about it. And it's the same on HFX. You know, we want to make that $10, another 10, another 20. I've done 23
Yeah.
trades, but this isn't a slot machine. This is a skill for life. And I found that, you know, I mean, I remember not so long ago, early this year, I made a quick 70 euros, you know, London session on something. And then I over traded because that's one of, you know, common failing that I used to have. I'm now a lot better because I've learnt the hard way. It's cost me money. And then the afternoon, sure enough, I gave it back to the market and then I wanted to get it back again. So then I lost more. And I thought, well, why don't you just stop at the 70? Because it gave me the percentage, you know.
It just becomes a vicious circle then, doesn't it? You just keep chasing your tail. It's not what you want.
Once we've locked that on, then it's not going to glitch on us. Come back to the same time frame we started on. So the same thing applies if we were taking a 4-hourly, 50-minute or 30-minute. Come back to the one we started on. So you can see that looks nice. You can see it looks, I usually just double check, looks similar and haven't done anything wrong. Because this is the way you build confidence in the future. Whenever you come back to a scan, I check I haven't glitched it. Because sometimes I've forgotten to lock something on and it's glitched. And I thought, thank God I checked that. And then am I, you know, is it a buy or sell scan? Has it reached the medium? Where's my alert going to go? Set it up. And then I know when I hear the alert, I haven't got to get my thinking head on about, hang on a minute, which way's up? I know which way's up because I've set it up. And as Chance likens it to putting your sports gear on, he said you wouldn't run on the field buttoning up your shirt and grabbing your helmet and putting your shoulder pads in.
Yeah, true.
You've got it already in the changing room. You've had the team talk. You know what you're doing. You know what the game plan is. And it's so true. And that's why I didn't rush into those 2 trades earlier on. I thought, well, what is your lesson you've learned? And I thought the lesson I've learned in the winter is if I'm at home and I'm trading, I need to be on that by 9 a.m. my time, you know.
So, there's always another trade, isn't it?
Yeah, exactly. So
to know with the buy and sell, how do you know if it's a buy scanner or a sell scanner? Is that where the C and the D point are?
Yeah, good question. Yeah, because it's always off the D point. So we measure the 80 pips from C to D because that's how the last bit of the scan in this case has run down the Elliott wave. The Elliott wave.
So that's a sell scan, that then?
This is a buy scan because you measure. The reason we always say we take the measurement C to D, although technically it doesn't matter, you could measure it D to C, is because that's how the scan is completing. And then it's a buy scan because it's always price off the D point.
Okay.
Yeah, because this has finished the reversal pattern, the 5 pattern points.
Yeah.
It's finished it off the C point down to the D, and it's the D point that can be the movable feast. Conversely,
because the C point won't move now. If anything moves, it'll just be the D point, won't it?
Absolutely correct. Yeah, well spotted. Yeah, exactly. Just trying to find.
I kept thinking, it's a sell scan because from C to D, obviously it's going down, wherever it's on some of them when it's C to D going up.
Yeah. So this is a sell scan.
Yeah. So if the D point is above the C, then basically it's a sell scan, and if it's above, and if it's below it, it's a buy.
Yes.
Okay.
Yeah, and obviously it will always be one or the other. And the scanner, which is highly accurate, developed by Christopher Terry, is 5. It's plotting 5 reversal points off the market. So it's 5 points. So if your X is up here, then your D is going to be up there. Sometimes I've forgotten that and thought, which way round am I looking at it when I've been trying to copy one? So it'll always be in line
with the
line. So the X and D will be at the same base. You know, it's 5 points, and the pitchfork is always off XCD. Always the first pitchfork, always XCD, nothing else.
Okay, and then
all that a pitchfork is a trend line based on Fibonacci, and the harmonic scanner is based on Fibonacci, and that makes it highly aggressive, highly accurate, much more accurate than trend lines. And it basically, this is doing all the heavy lifting for you.
Yeah. Do you trade off the Fibonacci like chancellors, or do you just use
Yeah,
trend line?
I have done successfully. Yes, I don't use it all the time. I do look for it. He does like it as one of his favorites. What he says to us is, if you feel confused, please promise me you'll take it off, because Fibonacci's are rolling lines of support and resistance. So they disappear the whole time. So
that's one thing that I didn't understand with, because when I've been watching the videos, I thought, you know what, Fibonacci, if you can trade off that, it looks to be like a lot more accurate. But it's when do you take it off, and if making sure you put it on the right. If you don't put it on the right spot, you can screw yourself over a little bit.
Well, we can look at that in a minute. So with our new scan, we've got it locked on, because the next thing is, so the first thing is, is your price 20 pips off? And the answer, it's at 17, so it's nearly there. Once it's reached the 20 pips, no retest, no entry. You're looking for a break and a retest off the D point. You've got the quarter theory below, so that's a very nice setup. So I'd just like it to be 20 pips, not 17, because you can see that the current momentum is still technically down below the blue, although it is now pointing up. So in terms of taking a trade off this, I'd probably put my trend line here, my alert. In fact, I'll do that. It doesn't always work like this. Sometimes I found it has just gone straight up. But because it's only moved 17, and I don't know what Chance would say, because obviously he's far more experienced than me. You know, he might say, actually, although it only did 17, it's now turned up, it's done a break and a retest. So we could have, you know, he might say that's as near as damn it. And have you got a trade here? Can we cover our pitchfork? We must always cover our pitchfork. Not really, because all JPY is only a 10, so you'd have to increase your stop loss, and we don't really like doing that. That's what keeps us safe, because at 2%, you'd have to lose 50 trades in a row to blow your account. And how many people do we know that drop off from trading, say it doesn't work, and they fail, and it's because they've blown an account? And then, as we know, it's psychologically hard. You've got to put more cash in. You've got to say, I've got to start again. I've lost my confidence. What happens if I blow that? You know, if you're losing and you're using real money, then you should be starting anyway on penny lot sizes, micro lots. And if you see you're losing, and I did that, I lost 7 or 10 trades in a row, and I thought, I just can't see why this isn't going in the direction I thought. And the answer was, it took a while for it to sink in. I was trading slippage because I was trading between the end of London and the beginning of New York. Now, but it took a while and a bit of damage, although on small lot sizes, for it to really sink in. But it was just part of the learning.
Was that the London crossover you were trading?
Yeah, and I've traded that every day for 6 months, so I know it pretty well, that it's always setups. And I don't want to get stuck in that anyway. So I never take trades after about midday your time till about, although I have noticed things have moved about 1:30 p.m. your time. So it's moving slightly earlier, but then if it's 10 to the hour, I'll stay out of it. And I do stick to that rule because it's just too stressful not to. So that stop loss is a bit big for me there. So unless it comes back down and hits that alert, so I could take it lower down, then I would be leaving this and setting my next alert up here, which I could do now. I don't care if it takes, you know, I've just had an alert went off this morning that I set from several days ago. I didn't take the trade, but I can't even remember which one it was now. So, you know, that's fine, isn't it? You know,
you're putting there because it's a pitchfork and a quarter theory crossing. So if it,
well, and I'm putting it there primarily because it's the next pitchfork, so it's my next point of interest. There's no trade in all this area, so it's either back here or up here. Because it's 17 pips and I don't like the stop loss at 17 pips, I'm saying, all right then, price, I can see that it's still selling. Maybe you're going to give me another opportunity to get in. Thank you, great. If not, you're already on your way up, because AJ is an Asian session pair, so it'll take off in Tokyo. I don't trade Tokyo because that's like the middle of the night. Sometimes I'm up on a Sunday setting up charts. Then I'm going to wait for here. That's fine. Yeah.
Yeah, no, I get it.
Fibonacci. Let's have a look at.
And then once we've gone over the other thing was, you talk a lot about which way it's moving. It's like it's moving in that direction, or they're moving opposite each other.
Yeah. The euros and the GBPs, they're driving me nuts at the moment.
Yeah, so that's what I don't get.
No, it's because they're what we call correlating pairs. So the if you're in a buy on the euro, if you're on a buy euro GBP, you wouldn't then want to take a position of selling the euro against, say, the USD, even if you saw them moving in opposite directions, because you're betting against yourself. Yeah, does that make sense?
Right. Yeah. So
there's that aspect, and then there's also the aspect of similar currency pairs. So if the euro is moving up, generally we would expect the GBP to be moving down, because because of Brexit and the European Union, they move opposite each other. If they're both moving in the same direction, it confuses me, because I'm not used to them moving like that, and that's why I've been looking at this currency strength thing on my watch list.
So if they're both moving up, would you not trade it?
It confuses me a bit. I tend to do all the setups and then look at which is the strongest move and which one I think is the most solid, and then reject the rest. So I think, this morning they were doing the same sort of thing, confusing, a bit jumbled up, sorting themselves out. And I thought euros are going up, GBP's going down. Even though I thought that, and that was fine, I then saw the move was on that. The best move was euro GBP for a sell. So I still had EuroAud was at the time going up. It's the open of London. So I saw EuroAud was going up, and I thought, because here on the right hand side, you see all the euros are green on the watch list. Yeah. This is all the pairs that I trade off chances list. So I created a watch list, and all the GBPs are generally red. So that says to me, and I put it on my MT4 as well, euros up and GBPs are down. So, and they can move slightly. So something very fast.
Yeah. So now they're moving up. So on that now they're moving opposite each other. But if they were both green or both red, then they're moving the same way.
Yeah, exactly. Because red's selling off. So they're a very fast pair like Euro NZD. They're 5 very fast pairs that are 10 out of 10 in the market. That might turn first. So say all the euros are going up and they're green, and then you see Euro NZD is red. That could be because that's moving faster than something like Euro USD, for example. Okay. So I saw the euro going up here, and it was going up on some of the others. But when I'd flicked through all my hot session pairs, which were the London pairs, and I saw this set up on Euro USD, I thought, oh my God, I absolutely love that, because I've got pitchfork and quarter theory and the 62 all in a tight box together in that red box. The most beautiful break and retest. Okay, it was only 6 pips there, but up to quarter theory, it was 7.5. It was just the whole thing, even though that's slightly shallower. We normally like 7, 8, 9, 10 ideally. But that was so good, that there was your entry there. And that was at 9:05 when I was making my coffee. So as I said on the call this morning, I was looking at it here thinking, oh, bugger, I bloody missed that.
So you were you're getting it just as it's curling kind of back round, don't you?
Always wait for it to curl in your favor. So if that was a blue buy candle, I wouldn't have got in, but it had curled from the blue, stalled on the green beautifully, stall out. All that lovely stall out also gives you the message as well. Price is going to fall off the cliff. All that stall out is very, very good signal. Beautiful trade. So I looked at it there and I thought, well, shall I get in there? But it annoyed me that it hadn't come back up to the 62. But actually, I could have got in, as you could have seen, and that was a really beautiful trade. I wouldn't be in down here. I'm not very good at running the longer trades like Chance does. That would have meant staying in So it came back to the 62. It
2
did come
hours,
above the 62, but that would have been 2 hours, 10 minutes. But you see, once it breaks the 1 minute trend, this is where, you know, we're all learning still. So if you've got a 1 minute trend on there, whilst price is to the left of it, you've got no reason to get out of the trade.
You just bring your stop loss down, don't you? Or you take profit.
Yeah, yeah. So if I'd said to myself, all right, I can see it's still going down. It's tested the 62. I'm past the hour. I'm past the hour, which is good. But then once price starts to do that and come up, breaks my 1 minute trend line, touches it again, breaks it again, I get too nervous and I'm out the trade because I think, oh no, I had 20 pips and now I'm back to 10. But then sure enough, it's given you, you know, that's a difficult. I always find this very difficult. So it's given you 30 pips for another hour in the trade. You could have had another 10 pips, so another third again.
Do you think that's just down to mindset, or just because you've lost before, so you think, oh, I'll just get the 20 and get out?
I think my personality is impatient. That I like to be in and out of a trade, bag the pips, and I'm done. So I have run trades where I've managed to get 100 pips, but not that many.
I mean, it's not a bad thing. It's not a bad thing to do what you do.
Exactly, because even if your account is small, we'll get there in the end because it's the power of the compounding. And no, it isn't pleasant when your account's small and you're saying, well, you know, I've only made a few dollars or something. But as Chance said, don't think of the dollars. Think to yourself, I've only, because that's negative language. Oh, great, I've made 3.5% today. Oh, great, I made 4%, because to do 5% is really, really going it. So, you know, if you can get that down with a small account, eventually the law of maths, that flat line has to curve exponentially. You know, we know, and that's why we need to treat it like a college degree and say, all right, I'll give it 4 years, because it does bloody work. So, you know, 20...
And you're racking up winning trades as well, so you get your confidence up and you're winning trades.
Exactly. So 20 pips at $10 a pip for an hour's work, right? I mean, my God, you know, that's 1,000, that's 4,000 a month. That's 48 grand a year. To me, that's minutes. Worth learning.
Yeah, 100%.
So it's just, and so that's why I think the slow burn is the best way, because it gets your confidence up. And I taught myself early on not to look at the money amounts, because then you want to cash out. And that's when you shoot yourself in the foot over compounding the percentage.
Definitely.
You want to stick to looking at trading view and pips, look at your analysis or look at the pip count. Do not look at the money amount, because then when you are putting on full lot sizes of $10 a pip, you're not thinking, oh, why, you know. So that's why I tend to get out here instead of, because once it's done that and I've lost 10 pips, so okay, I could have had another 10 pips, which is another 2%, you know, which is phenomenal. But that would have said to me, well, all right, you know, has it now finished its move? You know, I don't know that's going to happen. It's not like straight down strong line. Chance is very good at spotting that sort of trend. That's the momentum, what you're talking about. Where is the momentum in the market? And winter's less momentum.
You see where it is bouncing off the EMA and along, and it's breaking and retouching, and you can see there it's like where the EMA is starting to point downwards. So you
exactly. That's a beautiful setup.
But obviously,
my cup of coffee's just cost me a lot of money this morning. But you know,
it a nice cup of coffee though?
Yeah, it was. Thank you. So me being lazy. So you see, Grant Cardone, he would say, well, how much do you really want this then, Sarah? You see what I mean? That's the question. He'd say you would have been at that computer at London Open dead on 9 otherwise, or 5-2. Do you know what I mean?
But you're going to pass experience though, haven't you? Whereas, you know, and
well, I think in winter, I think you've got to get in earlier, because there's fewer moves, fewer big moves. So I think that it's seasonal. I think that's what it is. And different pairs give you bigger pips. So faster pairs give you bigger pips, you know, like something like CHF, Swiss francs, slower.
Do you just trade any pair then?
Well, I don't personally. Chance does. And I think Connor trades a lot more than me. I just don't like the CHF pairs. Occasionally I'll look at, USD chef or GBP chef.
Yeah.
I don't like the crosses because they're less money, they're less profitable, I find. But I'm not that brilliant on it. But NZD JPY, I just never even look at that. NZD chef, that only moves out of a 2 out of 10 anyway. I never look at that. I very rarely look at NZD CAD or NZD USD. I do look at AUD USD. So I look at all the London ones except the chef ones. I look at USD CAD. I like the fast pairs in London, really.
Fast pairs.
But
is that because you can just get in and out of the trade because of moving fast?
I can get in and out and the job's done. And also because I've learnt this, and I obviously teach it as well, and I love doing that and like building a team. So I like to I get a bit kind of stiff sat at the computer for too long, so I don't want to sit and stare at the charts. I've done so much of it. There is, as Les says, there's always a price to pay, isn't there, for learning anything? You've got to grind it out a bit.
I don't want to be sitting here watching the chart all day waiting for the trade to come in. I don't think that's why you get into doing.
You shouldn't be doing that. You should set your alerts. Like you go through the chart setups. Scans on. Is it a buy or a sell? Down to the 1 minute. Where is the pitchfork with the alert? If you're not sure which one to go for, like it's already hit the median, you can take a buy or a sell. Set 2 alerts, one on the buy and one on the sell. Price can only go 2 ways. And if it's sat in the middle consolidating, you're not interested in it anyway. And then say, all right, the only time I can trade is XYZ hours. See what alerts are going to go off then, or that you say, well, I'm at home this morning or whatever, so when the alerts go off, I can be fairly near to the computer and I can go and look at the setups, because I don't think pitchforks, and Chance would say the same, they're not really suitable for trading on a phone for obvious reasons. No. So let's just look just let me look at a Fibonacci.
So I think for now, if I'm just going to draw up scans, and then I'll kind of probably figure out what's best for me to trade and what not, and kind of have my own way.
Start with your hot pairs. So London session hot pairs are Euro, GBP, and Chef. Start with your hot pairs, because the sun's up, people have got their suits on, they've got the sandwiches, they're off into the offices, the money's being traded, the offices are alive, right? Whereas people in Asia are asleep. So why would you start by looking or JPY? So I always start with the hot pairs, because you've got more chance of them moving.
It's like our working hours, then, isn't it? Pretty much
exactly the same. Good analogy. So a New York session, look at USD and CAD as your hot pairs. Obviously, that's the 2 pairs. Asian session, you're looking at AUD, NZD, and JPY. And then within the context of those 3 sessions, you have faster pairs London's the biggest traded session, which is why I like it, because more money's being traded. New York's the second. Asian only ever moves 20 to 50 pips. And then you get expansion coming out of Asian session, because you've got Germany. People forget the EU. German stock exchange is coming on. Tokyo's ending and London is starting, and that's why you get fake outs and can bag some pips on Tokyo as it then goes into London. And then look at your pairs, because the 5 fast pairs are GJ, GN, GA, EN, EA, GCAD. So there's 5. Generally the GBPs move fast, except for GBP USD, which is slower. Euro USD is the biggest traded pair in the world, so you might want to always look at that. I'm always very interested in that. And then your good pairs, if you're starting off learning, are AUD CAD, GBP USD, or JPY. Those are the ones Chance mentioned the other day. They're great. AUD CAD, I know, I've got notes from being on his sessions, trends very nicely. Or you can pick a couple of pairs and say, I'm just going to follow GJ, Euro, JPY, GU, and see how I get on in the week and see when it moves, because they do move at certain times.
So the only markets that cross over is the London-New York session, isn't it?
It's called the New York reversal, but also Tokyo into London is in effect a crossover, because 3 stock exchanges. You imagine some brokers are thinking about going home, and some are just coming in. There's a lot of flux that is reflected, and also because Tokyo is the smallest session. So as as Les says, the expansion is caused by price being tested. Which way are we going to go? Because when it's just ticking along in Tokyo, what you've got is just banks doing a bit of buying and selling to tick over, and then you've got testing of the price, and then the moves come. And the other thing is, once you get a bit more into it, the market is seasonal. So spring is fantastic. You get more scans, spring to summer. Autumn's quite good. And then, as we know, winter's slower through to mid-Feb. It's a bit of a grind. And pips, you get more pips Tuesday to Thursday, because Monday the market's settling down. Friday it's closing. So you get, if you type into Google, pip ranges, you'll see loads of tables on Investopedia and things like that show you the bigger pips. Like GCAD will usually give you 50, 60 pips. Whereas Euro GBP don't expect 50 or 60 pips. It will give you 20, because it's a slower pair. So I'm just looking to see if I can see a fib. Right, here might be one here. This is Euro NZD, and I'm not brilliant on them. Bear in mind, I'm not, some chance-like expert. Fib retracement. So I'm thinking about a sell. So with a fib, it's always past to present, high to low for a sell.
Right.
Okay, so there's my previous high. So not over here, previous high, magnet on there, and it must be put on accurately down to the bottom of the candle. And then there's my zero. These are chances settings. So high to low, past to present for a sell, and vice versa for a buy would be low to high, past to present. Okay, and never on current price. Never on current price, because current price is still moving. And then once this move is finished, because you can see it's reversed back up. And in fact, what we've got there is a perfect rejection off the 88.6, chances favorite. That's his first favorite. And then the 61.8 is his second favorite. And that's very nice there, because you've got the 62 and the quarter theory. You've got rejection there, but it's reversed off perfectly to the pip off the 88.6. And our profit zones on a fib are always 0 is our take profit 1 zone, minus 27.2 and the minus 6183. And that's why I love fibs.
That there would be a good trade then.
The problem with it, well, hang on a minute, let me think about it. Again, I'm no expert. I'm just like everybody else. So would I normally take them? Not normally. So would I have taken that off there? Well, I've got the quarter theory there. I do like, and it's off the 78.6 as well. So once it had done that, I'm trying not to be influenced by the fact that I know it goes down to that D point. And then I've got a pitchfork.
Yes, obviously when you're looking at this, you don't know exactly how it's...
Yeah, I know. And I've no... Normally I'd replay this so I wouldn't see all this stuff to influence me. In fact, that might be the best way to do it. If I hide that. And settings. So in this instance, I'm not sure where the pitchfork is. Yes, because I'd be off a different pitchfork, wouldn't I? That's the thing. I wouldn't be on that pitchfork at this point because it wouldn't be drawn until down here. So what I've got to look at is which pitchfork is affected by.
Oh yeah, so essentially that scan there isn't even drawn yet.
Exactly.
Yeah.
So
so it means you might not have got into it.
Well, I would have, because I can see it on price. What's happening on it's price, isn't it? That's given me the fib. But I'm trying to work out where the previous scan is. That's all. Okay, so there's one There's one here. I think it's this downward one. And that is from, nice, 20th of October. This one I was a bit concerned about, and it disappeared off the scanner because I thought, well, surely it would have gone up there. But when I checked it, it wasn't. So I've always been slightly wondering about this pitchfork. But that is a 300, so 100 or so. So that's, so let me just come back down. Let me just come back down to the 1 minute. So that's the scan I think I would have been working off. I seem to remember that was the last one. Let's come back to our fib. So at this stage, take that off. Oh. Why isn't that removing? There. Right, let's have a look. Okay, so that's better. It was there, wasn't it?
Yeah.
Right, so if we put on our replay, actually this is a good example. So I think, so that's 11 a.m. So we're not, so we're into the London session. We can see that price has been in a strong, this is a momentum, but you see all that stall out in Tokyo, very strong momentum down. The outer Fibonacci's, the like the Bollinger Bands, so we know that it's strongly come back into the scan. So I'm thinking about all that. We've got a break and a retest back to the 62, very nice break and retest of the pitchfork, and down, might have moved a little bit fast to have got in, but there's a trade there. So we're just, so there's a sell trade there, I think. But anyway, we just play this. So it's come back up.
This should be a test it a bit, I think.
Yeah, it's above the 62, but it's still below our 15-minute line. It is a fast pair, this, remember. Oh, this is the only one chance to get greedy on. So as it's his favorite, it's my favorite. He says he loves this pair. So so anyway, it's so it's testing the 62. Now it's saying again that it's come out of these extensions, because we wouldn't trade in these extensions because you can get trapped below the 62. Quarter theory, but only a small break and retest, so that probably would have put me off, and I didn't get a retest back to the pitchfork, although it's below the 62, so I wouldn't have taken a trade there. Come back up to the 62, so that's quite a big break and a retest, and back up and right back up. So I've got, there's my 100% to my 0. So at this point I'm thinking, well, I didn't like that small break and retest. It came down 20 pips. It's come back up to test the quarter theory. Didn't, so I'm putting a fib on because it hasn't tested up there, or whatever reason I'm putting a fib on. So 61.8, so it doesn't, if it had hit the 100%, then you know, you have to start again. Okay, so it doesn't quite hit the 100%, so that's all right. And then there's a very nice perfect rejection off there. Now once it hits down here, in effect, the fib has finished because it's always 100% to 0, right? So once it's hit the 0, you can't then use the same fib. You've got to, it's a rolling situation. So you're going to have to move it. You know, it's always, they're always evolving.
Is that because it's formed a new like low and high?
Exactly. So perfect rejection there. And it's off that pitchfork. Yes, I would have taken this. And it's off the quarter theory. So I probably would have waited for it to have got to this below the quarter theory. I would have given up those pips.
Yeah.
Because I've got the confirmation of the break and the retest of the pitchfork. I've got perfectly off the 78.6 and the 61.8. I've got quarter theory there in my favor and the 62. That is a beautiful trade. I would have taken that if I'd thought to put a fib on. I don't always think to do it. So 0%, 16, 25, 35. And with a fast pair like this at a normal time of year, you're looking for major levels. So a fast pair like EN, you'd be hoping to get you 50 pips. So I'd also have that as a zone area in my mind, although I can see an old pitchfork there. And then the next, I'm trying to find where the next, if we come out of that, was that? Oh, I'm just wondering if I've, so that was a fib trade only because I think that belongs to the scan above. Yes, sorry. These are not, this is the outer extensions of the above scan. So this is a fib trade with off that, it's come out of this scan. But so to be fair, I've given you the principles, but I wouldn't be trading this because it's come out of that scan. I'd be waiting for this one here. Do you see what I mean?
Yeah.
I got confused. I thought that was the, of course, it was a very strong down scan. So this is the bottom level of it here. But the principle still applies of what you're looking for on the fib. Some people may well take a trade out of that scan, just because you can take just a fib trade, but we don't tend to.
Yeah.
Plus, you've got the 62 and the quarter theory. So there was a nice trade there, but technically I was wrong because that doesn't belong. There's, you know, that's the end of that scan, not the beginning of it. But I'd be waiting for this one. This pink. Oh, well, actually, the pink one fits. The pink scan fits. So I could have switched that on. The pink scan's perfect, coincidentally. So I could just pick that trade up off that pink one, but not the green one technically. Okay. So down to there at minus 27 gives you 25 pips. That's a very nice second take profit zone. And we'll just see if it did go down further to the take profit 3. I don't know. I can't remember. So it's testing the 62. We're now well into New York. And yeah, it does give us that run down to the next major level of the quarter theory.
Yeah. That's if you want to stay in it that long.
Yeah, exactly. Well, I do, if I'm off a fib, try and work it down to those levels. Okay, so is that helpful? So I'll just stop sharing.
Yeah.
Stop recording.
You've answered everything.